today we are actually talking about day traders because we have, I'll tell you, that's one single largest category of calls our firm receive for the last, I say 2 months since beginning of this year. And I also know why, because the stock market was surprising to many of the investors. So there are need for figuring out what to do with wash sales, what to do, and can I do mark to market for 2021? All of that questions coming up, right? To you. And one other things I want to tell you that I'm also an author, right? This is the book I wrote. It's on internet, it's on Amazon, and the audio version just came out, and you can listen to the book for 3 months without being charged. So this is a link I want to give you. You just go to Audible, then you put in the book name, Appointment with Ying at 8 a.m. So it will give you that. All right. So now let me get to the true content I want to talk to you. So I know you are here because you think you might be or you are day traders. So what is the definition of day traders? So there is no Wikipedia translation or IRS definition for that, but there are cases from IRS to recommend what kind of transactions, what kind of activities you do can be classified as you are day trader. And as soon as you are being classified as a day trader, and what you also entitles is to look at your accounting method to decide whether you want to be a mark-to-market day trader. And once you are a day trader, you can decide whether these expenses can be written off through business income. Once you are a day trader, and you can decide whether you want to run your day trading business under your name and your social security number, or you're thinking of forming a company to do that, right? So these are all the consideration coming from day traders. So you don't classify yourself day traders for no good reason, right? You are thinking of deducting more. You are thinking of maybe having a business going on, because not only I do day trading, I also offer advices of my trading or demo my trading online. And I have followers online who listen to my investment advices, right? Or maybe you spend $20,000, $50,000 to learn how to do the online trading platform, and those tuition fees can come in offsetting your income. And furthermore, when you want to be a day trader and you decided to go for mark-to-market trading, and what you are doing is you are turning your capital gain and capital loss into income and a regular loss, right? If it is regular loss, what does that mean? Let's say in 2021, I elected to be mark-to-market. And then I ended up with my investment form is no longer looking like 1099-B. It's actually a form with a code, with a number, looks like 4797. It is 4797 statement that you're getting because you are mark-to-market day trader. When you are mark-to-market day trader, and what happened is that statement will tell you what losses you have. Let's say 2021 is a hard year, so you lost a whole bunch of money. And if you're a regular investor, you have these wash sales, put away your losses, you cannot deduct. And even if you have a capital loss, you can only deduct 3,000. But what if you lost 300,000? And your capital loss is 300,000. Then I'm sorry, if you quit trading, you no longer have a capital gain, then you're going to deduct the 3,000 out of that 300,000 for the next 100 years. Assume you live to 300 years, then you will use it up, right? But if you are normal humans and we don't live too long, like 300 years, then what happened to you? You would have capital loss in there can never really save you taxes today. So this is where the people think of mark-to-market. A lot of them were driven by the loss because the loss cannot be deducted properly. They have the $3,000 capital loss limitation. But if you are a mark-to-market day trader and your losses is going to do what? Your losses is going to offset your income. What income am I talking about? I'm talking about your W-2 income. I'm talking about your interest income. I am talking about the income you made from your business. I am talking about your gambling income. I am talking about everything can be offset by the loss you have in mark-to-market brokerage account. So these are all the considerations. Like, yes, you say I am day trader because I trade very frequently. Majority of my trading is less than 30 days turnaround, short-term capital gain. And I, lost my job and I'm at home. That's what I do. That's convincing. That's really convincing. You are day trader. And then if you are day trader, the next decision you make is, do you want to day trading under your name or you want day trading under a company? If you want a day trading under a company, that just means that you need to form a company and then open your brokerage account and open that account under the company name, right? Not your social security, your name anymore, but it's a company EIN number and a company name. When you did that, and you can decide to elect the brokerage account under the company name and a company EIN number to be mark-to-market accounting method. Then maybe on the side you are running other businesses, is all under the same legal umbrella, it's the same corporation, and then you will account that all in the business. So this is one route you can go. But you can certainly go with your name and the social security number. So you will file Section 2, 4797 form and to document your losses in the investment. And then if you say, well, but I have expenses I need to deduct this related to day trading, and those are actually your business expense. And I will tell you that the 4797, that form, it did not meant for you to report expense. That form itself just capture the losses on the stock market. And it is not a form where you can add more, so you deduct your expenses. No. If you want to add more, then it will be a Schedule C, right? And then do you know that if you have a gain, if you do mark-to-market, you had a gain, your gain is regular income. But under 4797, that regular income is not self-employment taxable. It is like treated like your other income. If you want to keep the nature of that way, you don't want to have expense. Because if you move that into Schedule C, all of your gain is going to be self-employment taxable. So I hope you understand what I'm saying to you right here, right now is, if you are going to do day trader business under your name and your social security number, what you are really doing is just to elect your account to be mark-to-market and file 4797, and that's it. There is no expenses needed because you don't want to open up a Schedule C and start getting yourself into the audit red flags. Because if you open up Schedule C, so that means whatever you traded, it is going to be your income for that business. Am I right? So we're going to move that gain from 4797 into your Schedule C income. And then I will reduce all the expenses. How much expense are you going to have as a day trader? Very limited. You cannot have a lot of expenses. You just couldn't come up a lot of expenses. What can you come up, right? And then once you deduct a little bit of expense, but your whole gain is going to be self-employment taxable. So don't get yourself into that situation. And if you do have expenses you want to deduct and it's significant, you had a good reason for it, then maybe you should open up a business and get your investment account into the business account. So that way, and is your business elect mark to market, and you will account income and expense properly under the business structure. All right, so I want to talk to you about the mark to market. Just like the name suggests, it is marking your stock or your holdings to market value. Do you know what market value will be? Let's say we are doing mark-to-market election right now, and we submit that with our 2021 tax return, but you are electing for 2022 to be mark-to-market, right? And if that is the case, and when you are running mark-to-market, and when you are going through your transaction, going through the mark-to-market with your investment, and your mark-to-market is accounted as an income or losses for your business or for your personal tax return. That value of your loss or your gain is triggered by December 31st, 2022's stock market price sell value on that day. So if you look at my webinars yesterday, and I was giving you an example of this one share, ABC share, one share, and you bought it, you sold it for loss, then you repurchased it. In the mark-to-market world, you repurchased it for $7, for example, and you are holding it for value, you didn't want to sell it. And then December 31st comes, and then that particular share, it will be treated as if you sold it. Just hear this really, really carefully. The value of your stock, how much you made or not made, the value of your stock, it is determined by the last day of the stock trading price on internet. And if you haven't paid attention to that, like me, and I'll tell you that the stock market price tag is always higher on December 31st, that time, that moment, even for that day. Then turn around, they will drop. Okay, so what I'm saying to you is, let's say you bought a $7 stock, you hold it, you didn't sell. On December 31st, the value went up to 700 for that day. You were like, oh, good, I'm going to sell it as soon as year turn around. So I'm going to sell it. But in mark-to-market method, because you're a day trader, you have a right to do that election, and you are going to report $693 gain right there as a regular gain, regular income. So if you already made $500,000 from your other things, then your $693 right here is going to pay 37% of taxes. All right. But then January come, the stock went down to $7. Okay. Then you end up with a tax bill to pay, 693 times 37. So you ended up with a $256 tax bill to pay, but you don't have money anymore because it already went back, already went low. So mark-to-market is not a sure win, right? So this is what I want to teach you so you understand there's no magic. And actually the real magic is sheer luck of your own. And I don't know who really can manipulate the stock market, but there are people lucky. There are also people just pure lucky. They just, maybe you call them Warren Buffett. They know what to do. But you know, right now Warren Buffett makes money not because he just go on internet, because he has an inside information. He understands the company. CEO would meet him. They want his money, and the CEO would come to talk to him, and he have a sense of who they are. Then he invests in the company, then he make money. Or he decide not to invest in the company, so he doesn't make that money. You are not Warren Buffett. No company will tell you anything more than what they tell you on internet. So you don't have that knowledge to speculate accurately. You do have the knowledge to follow the trend. But there will be a time when you follow the trend turn around right away because you follow too late and you haven't really been there yet, but they're already done. That lucky event is already over, right? So I'm not discouraging anyone to be on the stock market. If I have time, I would be on it, but I don't have time. So all what I am seeing are the client's information. And I also had experience from my past, and I understand how stock works. So combination of my experience and the combination of all of my clients' collective experience that came up with today's conversation. So I just want you to know that if you decided you are a day trader and you have a job to do, the number one job to decide whether you want to do mark-to-market. You don't have to. You don't have to do mark-to-market. Then whether you are a day trader or not is not relevant. Okay, so you do mark-to-market election. That is to say that you are a day trader. So now, are you a day trader? You're going to set up a company for it, or you're a day trader? You're just going to do it casually. Do it casually and do it on your 1040. And even on your 1040, there's two ways of doing it. Just running 4797 without doing any expenses. Just put 4797 and treat gains as a regular income, treat losses as a regular losses. So you can, if you have a big loss, you can offset a lot of your income, getting a lot of taxes back right away, right? Then the other way of doing it is to treating your day trader as a small business, as a sole proprietor business, and then having your income and the expenses in Schedule C. In Schedule C means your income will pay self-employment tax. But if you don't have a Schedule C, you just run 4797, you will never need to pay self-employment tax. Does that make sense? So I hope that this is really a quick summary, because I have a lot of people coming wanting to know, should I do mark-to-market? That is not an answer a Ying can give you. But I want you to understand the mechanics of it. So wash sale is not forever lost, right? Wash sale is added to the basis of that stock. When you get rid of that stock, your wash sale would come in to reduce your capital gain for that stock. So let's say if you have a lot of wash sales, but by December 31st, you emptied all your stock, then you don't have wash sales. You will just have capital gain and capital loss. Wash sale only happens when you are still holding that stock. But mark-to-market is different. Mark-to-market is don't care you hold that stock or not. They're going to conclude your performance every year on your year end. Now, something to think about. If we think of December 31st is actually manipulated market, always makes stock price high for that period, and that's not good for a mark-to-market, right? Because you're always going to end up with a big value. Then more value than you think you had. Then you're going to pay more taxes than you think you have to. And then think of, in tax world, the year end don't have to be all in December, right? You could set up a company, the year end is not in December. Maybe the year end by the end of October is actually the best way for the stock market. Just think about that. I'm not giving you a plan. I am just saying that Mark to market is marking the market at the end of the company ends, and that day, if the market goes crazy and give you a lot of up hope, then you're going to pay a lot of premiums on taxes. But of course, if you lose next year, it will come as a loss, so you save taxes. It just, I don't think you should make your gain and loss manipulation as a goal for whether you do mark to market or not. I think you want to look at it as whether it is a business. If it is a business, it's worth a lot more thinking, sure, for this particular account, we can do mark to market. And for your company account, we can consider other accounting method. So there are so many things, so many layers of things we can put in to make your tax filing and logical and efficient, right? And if President Trump can build career with paying so little of taxes, that only means until he's charged with tax fraud, if that doesn't come through, if that is not the case, if that is totally a nonsense, then tax efficiency is worth discussion, is worth a good discussion, how you can be efficient, right? So I think I will conclude my today's conversation with you right here. And remember, you can always get onto our YouTube channel to put in your recommendations. You see how I see people's comments? I do come in here to see people's comments. So you can give me a comments here, and I know that what people wants to talk about, so we can go ahead talk about that. And my webinar and my talk is always here. So this is my Saturday talk. Should I elect the mark to market? And this is the one that I went in, did a really detailed number analysis. So that might be a good way for you to revisit the calculation of whether you take wash sale hit or you go for mark to market. And then other than that, and today's 30 minutes will be here too. Please subscribe to our channel. And if you have friends and relatives are also doing stock trading, it is such a good gift to give them, to have them learn our channel so they can be trading wisely. And you can make a lot of money, but you can also submit a lot of money without being necessary. So make sure that you are smart, efficient, not just for your business, but also for your taxes. All right, I will see you again and on Saturday. Bye-bye.